welcome back to another Watson Brothers Team Stats video. We are here to cover the stats for July of 2023. Go ahead, Ian.
So July of 2023 was another exciting month, as they tend to be, but this one I think is a little more crucial, and we're going to drill down a little bit on the numbers because it's starting to set a pattern. Last month, as you remember, we saw things starting to ease up, and there was a little bit more uptick in the market. We're starting to see things kind of settle in again, and the interest rates and other market forces are starting to have an impact. We're seeing, for example, units listed, our inventory is down overall versus a year ago, about 7%. Units sold are down 20%, but the dollar volume of those units sold is down 26%. So we're starting to see a gap, which means prices are coming down. And so where are the prices coming down? We follow the big three categories, single family homes, apartments, and townhomes. And interestingly enough, apartments are the least affected. They are the most affordable in the marketplace, and they're the least affected in terms of price adjustments. Townhomes are next, but the big one is single family homes, and they're off almost 9% versus a year ago. And that is simply because the average single family home price is over $1 million now. And so that is the least affordable category of home inventories that people can buy from. So again, apartments are least affected, townhouses next, and then single families. And there's a number of forces that are at play right now, and typically it's supply and demand. So when inventory drops, prices rise. We're seeing inventory drop, but prices are not rising because consumer confidence isn't there and people are not willing to spend money. So maybe we should explore a little bit about the reasons why they're not spending money and some of the things that the industry is doing to try to get consumers to spend money.
Even within our realm of talking to builders, whether it's single family home, townhouses, or even some apartments now, they're even coming across with some really interesting incentives, whether it is for a realtor, like we looking at a home probably last week, and they were giving you a $20,000 realtor bonus. There's lots of open houses everywhere. There's lots more. You get this house, you get a hot tub. Like a lot of these more incentives that get people into the market because people are sitting, and interest rates are one thing in which we're definitely keeping an eye on and focusing on, because the last interest rate hike has gone up. It's only a quarter point, but for someone who's buying a house over $1 million, that changes a lot within the market.
Yeah, absolutely. Yeah. So that buyer confidence is kind of waning a little bit with that interest rate hike that happened mid-July. We do have another one coming beginning of September. So it'll be interesting to see if we'll see a hold or another increase. And that's what I think is so important about these sort of incentives, is that these developers and these realtors are sort of trying to battle this buyer confidence and getting people to get in and show their houses, because there is that inventory out there. It's just a matter of people that are wanting to pull the trigger, that are sitting on the sidelines right now. So I think it'll be interesting to see what happens beginning of September with interest rates, just because I think it'll trigger a lot of people who are sitting on the sidelines to push forward and move forward and possibly purchasing.
And summer holidays are also over as well.
Yeah.
But we also noticed that into July and August, things definitely dip down a little bit more. It's a little bit more of a slower market because people are taking holidays and they're at the beach. And coming into September, we definitely see more of a ramp up of more listings, and the listings out there currently are doing
well. I think the other thing that's going to impact the marketplace a little bit is anybody that's out there shopping right now has a rate hold on their mortgage rate. And so those typically last 90 to 120 days. So we'll start to see those get to an end. And as those come and wind down, people will hop back in to take advantage, especially if we see on September 7th another bump in interest rates. That rate hold that somebody is sitting on will look actually even better on September 7th. So that may be enough to get people into the market again.
Absolutely. Yeah. So we'll see you again next month, September 1st, to tell you about the stats for August 2023. Until next time, we are the Watson Brothers team. If you have any questions about real estate or anything else, give us a call at
250-712-
2222.